tryna take it down, place for. You just scoring mines, best the bar.
All right, ladies and gentlemen, I got your watch list coming into December 18th, 2019, and the stock market is going to gap up. Okay, maybe that's a little dramatic, but there is something playing out right now with especially what we saw today that could lead to a big upward move, or kind of just the nature of what we've been watching with this melt up the Fed, all that if you've been paying attention. So I want to go over that. I want to talk about FedEx a little bit. They had their earnings. We had an earnings play. That's going to be interesting to watch. It was kind of almost spot on, creepily right at where it was expected to move. So even the condors looked good at first, but they weren't. But this is an interesting play. It says a lot even about what this means for tomorrow, what could cause moves in bigger areas, rotations, the indexes like transports, but overall see more of this rotation. So I'm going to go over that. I'm going to talk about kind of the main things we need to discuss for tomorrow. So I'm going to go over that and the main things we need to talk about tomorrow. I'm going to go over the plays that we made today, and then I'm going to go over some plays for tomorrow. So you guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it's pinned in the comments. We better see you there in the morning. All of the trades we made on FedEx, we did live, even the ones in the morning. And that, I'm excited to talk about that one. So just make sure you're there. All you got to do is be positive, respectful, and then the most important thing you need to do, post your watch list below. Let us know what you're looking at. I told you guys I'm auditing y'all. Y'all better source that information. Post it below. Let's go. Let me see what y'all looking at. Come on. What we got coming up for this week and next week, you're going to want a lot of options. That's all I'm saying, man. It's for your own benefit. So post it. Other people are going to post it and see it. Let's go, baby. All right. So to talk about what I mean here with this gap up and what I'm expecting, it has to do with kind of the formation that we saw today in terms of how the market's moving. You know, we are still up. We barely closed positive on the S&P, even all the indexes. You can see the market really didn't do anything and kind of sold off here. Now, this is pretty much, if there is going to be a rally and it is going to stall, it's probably going to happen here. You might get a few days, but the key has to do with the volume. We've had these super huge, powerful volume days, and these are very, very dramatic considering the price. You know, if you look at dollar volume, these have a lot of weighting. So today, the volume was at the average. That's that pink line right there. But essentially, it's fell off a pretty considerable amount, felt like a 20 to 35% decrease. But what this is showing now is kind of how the market is going to be and kind of the stance. And, you know, we saw it today with what occurred. You had this because this was part of the rotation. A lot of the names that led on Monday, those came down. And then some of these names that were down, they came up, and some of them were on the watch list. You know, think Home Depot and the ones that didn't move as much yesterday. Those were real big winners today. But essentially, anytime we've seen anything like this, when you're getting one of these big rallies up, usually what happens now, the volume's going to slow down. But even though volume drops, it's going to hold this price. And then usually, I think we're going to see it sometime this week or early popping into next week. You're going to see a gap up from here if it's going to hold and maintain. Otherwise, if the volume does start declining from here, we're probably going to see it come back down maybe to 314, even 311, but 311 seems like such a long way from 320. So keep that in mind with how we're watching here, but I'm going to keep my eye out for this. Look to play these opportunities. The key coming into tomorrow is watching that rotation effect. Like I just said, find the winners and losers. So tomorrow, the losers for today, a lot of the tech and stuff that brought down the market, if those start to surge, then the names that did good today go kind of back to what they did on Monday. You might see the market hold up and do what we saw today. And then Thursday, there's pretty much Thursday, Friday, Monday. What is going to cause the gap up is that all those stocks are going to meet up at once and then make an upward movement. And that's going to cause the gap because with the push and pull, it's allowing us to stay up here. When they all come together and meet, it's going to go boomba, boomba, like Argentina, #1 song, iTunes. So that is what I'm going to watch, and that's really going to be the key. It's everything we even talked about yesterday, keeping your head in the game, watching for the opportunity. All of that applies, so you better stay focused, baby. Make those call-outs. And actually, I will encourage you guys to put this in your watch list below if you're going to comment there. If you spot any of these big divergencies, anything that had rotation, anything that was down today, either more than its peers or anything that was even up today, while the market didn't do much. So those are always great to call out, especially in this environment here. So that's pretty much it. Let us get into the plays. Well, actually, I will start with the play that we made today, or a few plays. We did have FedEx. I have it on screen here. This is going to be one to watch tomorrow for earnings continuation. Again, it was pricing in literally $12. So seeing it hold exactly down there is kind of weird. So I'm sure we're going to see a move tomorrow pre-market and throughout it. But I like them. We did a strangle on it. We got the calls. We got a call and a put. Kept it small, $60 both ways. Did a 185 call and then a 140 put. But the puts were more expensive, and why I chose to play it today, this was a huge, huge key when we go to look at the options. It met the criteria barely, but the key with it, if you guys remember, and I got next week too on the play, but if you guys remember, I was talking about this for the last few weeks. We said FedEx. It had a good chance, and then it started to run up. So that was the problem with the contracts, and you could see it over the last few weeks, last even few days. These contracts went from 20 cents to like 80 cents. There was all that week, but now pretty much I was able to get them. I got these ones at 20 cents or 22 cents. We were able to get it right pretty much at the bottom. That was the perfect time to buy it last week that we missed out on. So that was good, and that was it. It pretty much made today a better opportunity on the call side. And even though the puts went up now, it was the same situation. You got to buy the puts at one of their lowest moments. So that's why I said we should take it. We'll look at it, but I still wanted to keep it small because considering the news, and when you kind of see one of those weird events happen before earnings, it usually moves pretty weird because some of the move that happened prior to earnings is kind of acting as that additional drop if you think about it. So yesterday you saw a pretty big drop. It's kind of, think about combining both the days. That's why tomorrow's going to be interesting as well, too. And then the next part is that if you see that same factor I just showed, or that same scenario where both puts and calls drop, that means the market's expectations on both sides drop. So they were actually pricing in bigger than $12 a few days ago. All of that stuff happened with the news. It changes. So that's why we were able to get it cheap. So kind of interpreting that, it had some advantages and disadvantages in the grand scope of things. But we got that. That one's going to be a good play tomorrow. The puts, since they have time and we're kind of close to 140, they might go up, but they might not go up a lot. So watch that in the morning. Be careful. You might not see them go up, but if there's a 10-minute play on Fedex and it keeps dropping, those are going to start running up pretty quickly. So this could even be a play that you could make as a continuation. So we're going to watch out for that. And again, they had really bad earnings, and now the implications this means, we want to watch sympathy plays, watch UPS, watch transports, but FedEx is a big company. Transports is a big industry, so we are going to even, watch this in the grand scope of things to watch for any other rotation and push and pull and see where either money's going to it or from it, and how the market reacts. So that's the first play. That's the one we're going to watch, and that's the one we made. And then the next play we made, I like this play because it did something I like with any play. You get it, it pretty much instantly goes up 100% or so, and then even throughout the day, it may lose some momentum, but it holds up there. So we grabbed this literally within 3 minutes in the morning. So this is the one I put up on the watch list yesterday, and now, depending on the scenario I'm saying, looking for this gap up and all that stuff I talked about, I'm still going to be looking at those companies I brought up yesterday. So that's going to be Disney, Microsoft tentatively, the HD as well on the call side. They already ran up, and we're kind of a little late on that, and then those UNHs. But we played this Walmart. It was a next week, December 27th, 124 call, and we got those at 3 cents. Or excuse me, I got 3 of them at 9 cents each. They're at 11 and 13 on the bid. They went up a little bit higher earlier. They were at like 17 cents at one point, but still up 62% holding on the day. And this is what I was saying, the price we got them at, you can see here in the morning, they opened at 9 cents. Within a few minutes, they shot up, and then they came down, and we were able to scoop them pretty good, and then it came right back up. But it touched back down to open for a little bit, but not over the price we paid for it, and then it just kept going and holding up there. But I like Walmart. Again, they did good, but they didn't do as good. You can notice they're not really pushing and pulling. They're just slowly edging up. So this is what I'm going to be watching for, because there's going to be a day where the market may not do much, or you're expecting a rotation. And if Walmart keeps edging up, I think above like 122, 123, that's where things get a little good there. I believe it's all-time highs. I think 124 from the earnings, but either way, it's going to be a good one. I like them, so that's going to be a good watch. And that's pretty much the plays that we made today. As far as everything else, we're still in that Boeing. That the debit spread from yesterday was up 50%, and then it dropped to, I think it's down now 34%. So it had a big swing. Boeing was a little bit weird today. The fact that it pretty much closed unchanged, this is going to be something to keep your eye on, because people thought it was going to, because in the morning it dropped, it started to hit new lows, and then it rocketed up so fast, people thought it was going to do the same old, okay, it's going to go to that 330 range like we were expecting, like we've always seen, and then it started to drop pretty sharply again. This one's a little confusing. I think there's still more in the cards here, and we're going to see something. So I'm still holding that spread. I want to see what the premiums are at to see what we could take advantage of it, but I still think there's a big play brewing and Boeing, so watch out for that one. Then, oh wait, I forgot to tell you, I have a kind of a potential play. The next thing I'm going to be looking at, I guess here's the potential play I'm looking for this week to even profit off with the gap up. I like these 155 on Disney's. These are 20 cents. They've kind of been doing this thing here, so they're holding this range, and that's the key. The Disney contracts have kind of been holding up, so sometimes you guys see this contract since last Tuesday, it's pretty much holding the same price. Is that good? No, because a week of time went by, so it's holding the same price with the week down. These are still pretty expensive, so we're going to try to find the sweet spot with it. And even with that Walmart, with some of these being so cheap and offering a certain opportunity, it might be good to scale in, but I'm going to watch those. I need those to come down, and I even talked about it. Here is the play again from yesterday. I'm still going to keep my eye on those UNHs, and I said for the weeklies, what I'm really looking for, I need these 295s to come down to 40 cents. That's my target, but that's the thing. It depends where the underlying asset is. So if it comes down to 40 cents on a Friday and it's still this far away from the money, that might not be a good play. So again, tomorrow's going to be kind of a cutoff for these, and we're going to reevaluate these. But these 300s, they're decent, but I think I said I wanted these at around 10 cents or something like that. So we're going to see, but I'm going to keep my eyes on those. As far as everything else now, watch Cardinal Healthcare. Watch some of the healthcares. They got a lawsuit. It was like them, I think MRK and a few. I was expecting healthcare to have some good momentum, but they didn't. So that's actually important to watch here, and I'm going to be watching that coming in tomorrow. Like we said, the UNHs and then the HD. That player we talked about yesterday, that went up as well too. So I said I think it could go to 220, 225 on the high side, because somebody was even asking, they're like, should we get a 225 for this week? I said I don't think so. I was looking at these 225s. Remember that from yesterday? They had a good run this morning, and then they came back down, but these are still these ones are a little bit less likely, I'd say. I mean, we did get a good move here on Home Depot, but it was these 220s were the ones I really, really wanted. So they went up 53%. We put these up yesterday. Home Depot was just out the gate, and it was a monster. So watch them. Hopefully they rotate tomorrow, but if they kind of do what Walmart does, I mean, they're going to be a behemoth, but 220 is what I'm looking at for them. Then watch Microsoft. They closed down, so if we do get an uptrend tomorrow, or we see tech kind of rebound, they're going to be the ones I like. And again, I didn't look at too many plays from today, but I still like them. Then McDonald's actually sold off, and this is kind of what I was expecting here. So again, look at how Home Depot killed it. Look at McDonald's coming down. Remember that theory with the credit spread. So depending on how McDonald's opens tomorrow, I will look at some of those selling those credit spreads, maybe an Iron Condor, but when we checked the prices the beginning of this week, they were awful. So watch out for them. Then watch Shopify. We were up 1,000% on that debit spread. Then it came down. We're only up 500%. I need to look to cut them and also that Lulu, because the Lulu now, that Lulu Iron Condor is going to start losing more value as we come closer here, because this is the break-even price, so we need the stock to go a little higher. Otherwise, those 222s might not hold the same value. So we'll see tomorrow. I'm going to be going over those. Both of those plays have, that's like $500 in profit between those two. So keep your eye on them. And then now watch Johnson & Johnson. Watch some of the companies that did better. I'm going to be looking at them. I thought they were pretty interesting. They're a low volatility stock, low IV, and then you look at them towards this high. That's a meme rotation, but take a look. They could be leading the SPY. That's what I'm kind of, you don't feel me though. But watch Johnson & Johnson. I like them. And then, like we said, Disney. Then finally, the final chart, I'm going to say Tesla. Then I'll get to the last point. But watch them. I think either this week or next week, they're going to test that all-time high. So keep your eye on them. They're holding pretty good. They're decent. But lastly, I'm going to watch the chip makers, specifically Micron. They have their earnings, and people have been talking about with everything going on with them, and something I think is related to the China ban. Remember, Trump brought them up in one respect, but watch out for them. And then NVIDIA, AMD, you can give Qualcomm a secondary runner-up, but a lot of the chips did good. There's going to be a lot of plays. This is kind of that industry we've seen a lot of good activity from during this rotation, and people are seemingly willing to take the risk because they've slept on it a lot this year, so we're going to watch out for that. So, but that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need y'all to make good choices. You need to keep your head in the game. I need y'all to be aware there's a lot there. We don't want to miss the opportunity. So source that information, post it, baby, and let's go.